Hello everyone. So here all the things can be seen together. This is the Enneagram. The numbers which are there 1, 4, 2, 8, 5, 7, which is also called as the law of 7. We have considered this on this as a chart. So when we draw this in terms of a chart, which is 1, 4, 2, 8, 5, 7, this is how this looks across on the chart. And when we interpret or maybe put it across on the same chart of May array from 1930 to 1957, we get an exact structure. We get an exact structure which can be seen over here as it is. So this is again an important discovery which was there of Gann. Of course, he has nowhere written about Enneagram, but if we talk about law of vibration, law of 7, this is what we get across in the form of an Enneagram, which comes from George Gurdjieff. The findings of George Gurdjieff, we are able to see that. And then from this, we can have this as an interpretation on the chart, which can be seen over here in terms of 142857, and the same thing can be seen on May array chart also. This is again very important. Try to focus on this. Maybe you'll be able to find same kind of vibrations, same kind of cycles typically again and again. So this is again an important cycle. This is how you place across as a cycle and come to know about cycles. In last session of Master Commodity Course, we have specifically seen May con swings which were there, and we started from a high in 1925. We saw a low, then a reversal, and again a bottom which was there in 1933. This was the first one. We saw that on the chart also. We had taken for Maycon, probably Wipro, because the numbers were very similar. So chart was, yes, we got a high, then we got a low reversal and then coming down. Now we'll go for the next part, how this has been happening. Let's say, for example, we have this bottom which was there in 1933. And from there again, we got a high and then this low. How the structure has been formed, let's try to see that. And then the upside movement from there. So again, we'll do the same thing. We'll again have a chart. Don't go for this candles, but we are just trying to see as per the numbers which are there so that we'll able to at least get the price. Let's say, for example, we have on the right hand side the price which has been given. Let's say this bottom was there for 24. So we have this bottom of 1933 which was coming to 24. Where we get that 24? We'll see this in Master Commodity Course. It comes on page number 20. So over here it is May con. So we saw that was a high, then a low of 67, then we again got a high of 122, and from there we got a bottom which came to 24. This was there in February 1933. Now let's see the upside movement from here on. From this bottom of 24, we go to a high of 139, which is being shown over here. Even where we get this high in, let's see that. So if we probably try to go further, 1932, 1933, 1935, 1937, May 1937 is being given, but there's no price which is specifically been given. So the price is given on next page. We'll go for the next page. So we again have May con swings 1925 to 1954. And if we see over here, this is 1935, 1937. So May 1937 high was 139. So here we see a high of 139, and from there it again went down. When did it go down? Let's try to see that. After this, the main trend was down, making lower bottoms and lower tops until August 1939. Low was 42 cent per bushel, around the same low as April 1934. So 1934, this was the low, and again it was more like a double bottom over here, which came to almost around 42 level, and from there again it started moving up. So if we look down accordingly over here, from this 42 and again it started moving up. So we made a bottom of 42, and from this bottom again it started moving up, and finally it made a high in September 1947. High was 288. Let's look on the chart also. So here in September 1947, we got a high, and this high was approximately 288. September 1947, we got a high of 288. So here we go to a high of 288. The points have been given over here, basically. So what we got is we got a bottom of 24. From this bottom, we went up to a high of 139. And from this 139, we again did drop down to somewhere around 42. And from 42, again, we started going up to 288. Again, let's look at the structure overall. So how the structure has been formed. We had a bottom. So let's say this level is 0. And from this, it touched to a level. Let's say this is level 1 or maybe 100. And from again, we find a retracement. And this retracement comes somewhere around to 25% level. Of course, it is below that to 42 levels, and 42 was more like a double bottom. So here we saw this bottom and again second bottom. So again, this talks about Gann's rule, which is in the form of double bottoms. Whenever there is a bottom which is being formed and a second bottom is formed at that level, probably we can start moving in the opposite direction. That is in the upward direction critically. So again, one more rule of Gann's which is being followed, but one hidden rule which is over here is the market comes somewhere around to this ratio of 25%, to this ratio of 25%, and then it starts moving in the opposite direction. Over here we had got a bottom, and from this bottom the market did go up and it reversed back. It reversed back to the 25%, and from there it started moving up. So this is for an upside movement. What happened for the downside movement? The downside movement, same thing happened. We got a high. From this high we got a low, and again from here it reversed back. Where did it reverse back? It again reversed back to this 25% level. Very important thing, from this 25%, and again it started moving in the opposite direction. So the retracement which has been coming to the ratio that is somewhere around 25%, 25 or 25%, whatever you call it as. Over here, when it starts moving in an upward direction, yes, again we see the retracement which is there, that is again coming at 25% level. We saw the rule which was there for 50% level, but the hidden rule over here is the market comes down to the 25% level. Here also again we see the same kind of format. The example which has been given over here, same kind of similar ratios are being formed very typically in the same way. Of course, when we see the extension or the market going in one direction, probably from here when it goes down, yes, we see different ratios. Again from here when it goes up, here it goes for a different ratio. This is somewhere around 230% or maybe 225%. Here it is somewhere around 160%. So the target may be a bit different. That has to be calculated in a different way. But here, when I want to take an entry over here, I know somewhere around at 25% level of the ratio, I can always take a trade going into that direction. This is again very, very important for us. This is one of the hidden rules which is there from Gann. So we had a high, we had a low, and from there, there was a reversal or a retracement, whatever you talk about. But for this ratio, this was somewhere around coming to the 25%. Right? Understand this, from a 0 level, we went to level 1, and from there, we returned back to the 25% level, and from there, we got moving in the opposite direction, that is somewhere around till level 24. From this level 24, yes, we take this level 24 over here. From this, again, we go to a top, that is level 139, and from this level 139 we again come back to 42 level, 42 level, which is just below this 25% level. And why did it come down to 42 level? That was more like a double bottom, and from there it started moving up. Very, very important. Now, what I will do is we'll again try to go to other examples and try to find out whether the similar kind of thing is been happening, so that we can have a concrete result where we know that, okay, this kind of patterns or maybe something in terms of cycles, whatever we call it, is been typically repeated. This was for Maycon. Now let's go to the next part. Now, whatever we have seen this, let's try to see if we are able to get some similar kind of thing which is there for May ray. Now we are going to see the swings which are there in May ray is from 1932 to 1954. Let's look at the chart also. So this is for May con. And if you see over here, this is there for May ray from 1932 to 1954. So these are the dates over here. Let's try to zoom across over here. We had taken for Maycon, probably Wipro, because the numbers were very similar. This is for May Ray from 1932 to 1954. And let's try to see what are the details that we get. So roughly nothing in terms of numbers which has been given. Ray is very profitable to trade, and most of the time it shows profits in comparison with wheat and runs soybeans a close second at certain times. You can see by the chart how bottoms and tops are formed, and you should buy when it declines to a new low level and sell when it breaks into new high levels. Note 1938 to 1945 when lows were around 42 cent and 40 cent. So we have a low which is there in somewhere around 1938, around 40 cent. So we had two bottoms, one was 42 cent and second is 40 cent. So probably somewhere around in this time frame, we see that, okay, this was the first bottom. So we have 40, and from 40, it is 48 maybe. So there is somewhere around a difference of 8 points, one block, or maybe the cube is going to be totally of 8 points together. Let me zoom it across. Probably this will be giving us a better picture. So this is somewhere around 42 and 40. So we had 42 and 40 a bushel, a series of bottoms making this a buying level as a real investment. So this is going to be for long term. This is what he says. February 1941, when final low was reached at 41 cent, the price started to move up, and when it crossed 54 cent, you would buy more. So probably that was the previous top which was been crossed, and after that we can go further. So probably when this top was been crossed, probably after that you can again start buying more. You could buy more. The advance continued until January 1942, high 93 cents. So what we did is we had a bottom which was 40, and from this bottom of 40, we went to a high which was 93. So 93 was a January 1942 high. Let's look at this. So this is 80, 96, and this is 96. So somewhere around at this point that we see as a high. High of January 1942 was 93 cent. So we get 93 cent over here. And probably from there again it started dropping down. So there was a bottom, maybe probably a high, low, then a top, maybe a higher top. And from this again it went down. Fine. Again somewhere around at the previous high, just nearer to that, maybe probably more like a double top. And from there the market again started coming down. Let's look at this levels also. What are they exactly coming to? Somewhere between 64 and 70, 70, 72. So this was our January 1942 high of 93 cent. The trend turned down temporarily from this level and declined till May and November 1952, low of 68 cent and 66 cent. Higher bottom than October 1941, a buying level. Now this is October 41, probably there was a previous high, and this was like a higher bottom than this previous levels of October 1941. So probably that was a buying level. Let's look at those points also. So this was the previous bottom. This bottom was just higher than that. So probably that's why it has been suggested this was a buying level, and again it started moving up. So this is 66, 68 levels. which has been given 68 and 66. Let's look on the chart where exactly this has been coming to in terms of ratios. Now, if this is if this is level 0, which is 40, and the high after that, which was 93, and if we look at this ratio from 40 to 93, the 50% level exactly comes at 66.5. The level which has been coming down to over here exactly is 66.5. And if we look at probably the bottom that we had was again 66, 68. So no doubt this is the 50% level. So exactly at 50% the market did come down to, and after that probably it started moving up. So our bottom was exactly 66, just near the 50% level. Again, this has been given by Gann as a rule. So definitely we can apply that and see on the chart also that this is exactly been coming. Now he has not exactly mentioned probably in terms of a 50% level, but yes, more like a double bottom. So definitely we can buy over there. Higher bottoms than October 1941, a buying level. So a buying level is definitely a double bottom has been formed over here. Apart from that, a 50% level. So additional confirmation is what we are getting for a buying level. You would buy more when it crossed 81 cents, and then later after it reached to April 1943 and crossed 90 cent. You would buy more, and when it crossed 95 cent, you would buy more, and finally when the price crossed the high of 1933, 1936, 1937, you would buy more, as it indicated very much higher prices. It talks about very much higher prices. Let's look at the trend after 66, 68. So this is somewhere around 66, 68. Yep, probably this is 64. And on this line, just above that is 64, 68. Yep. So what we see is probably after that, this is our high, which comes to somewhere around 93. So when it crosses over here from 93, we can buy more. Let's look at those levels. So after crossing 66, 68, next is we have 81. So this is probably 80 and 81 level. So probably after this high, when it crosses up, we can buy more because this was the previous stop. After crossing that, yes, definitely we can buy more. After 81, next level is 90, April 1943 high. So this is somewhere around 90. If it breaks across after that, yes, we can buy more. After this is somewhere around 112, 100, between 112 and 120. Let's look at that. So after 19, we had 95. So 95 is probably this high level. When it crosses this, you can buy more. This is 90, this is 95. So after crossing this level, you can buy more. After crossing this level, again, you can buy more. Again, after that, the highs of 1993, 1990, 1936, 1937, you'd buy more, as it indicated very much higher prices. So after this, probably this was the previous high, which is somewhere around 120, nearer to 120. This is nearer to 125, 26. When this was being crossed, again, you can buy more. And as it starts moving gradually, making higher high, you can go on the topward side also. So this is again 94 cent. From this level, there was a rapid advance crossing the highs of 1944, where you would buy more, and then when it crossed 152, you would buy more. Let's look at 152. So this is 152, and when it crossed that, probably you can buy more. So this is on the top side, probably over here. This top which was there, when it crossed that, you would buy more accordingly on maybe closing basis. The advance was rapid till May 7, 1946, higher, 286 and a half, the highest price in history. So this was the highest price of 286 and a half, that is $2.86 and a half cent. Here you would be keeping up the daily high and low charts, and this indicates high. a selling level and you would have sold short. A rapid decline followed. So whenever there is a rapid high, probably you'll be able to follow with a rapid low. But let's look at this level of 286 and a half, where it comes exactly to, because this is the high which has been coming down to 286 and a half. Let's look on the chart. We had a bottom which was there of 40, from 40 and went to a high of 93. We get a reversal of 66 which comes at 50% level, and from there it starts ascending on the top side, and the top was somewhere around 286. The top comes to around 286 and a half. So in terms of ratio, if we see, this is somewhere around 400% or 460 or 465% approximately. So yes, again, the most important thing for us is we are again getting a reversal at 50% level. The most important thing, we are getting a reversal which is there at 50% level. And from this 50%, which comes to around 66, we see a high of 286. So probably because it has been making higher high, higher high, higher high over here, we can go with the trend accordingly, because Khan says very important thing is we should go with the trend. So over here, yes, this becomes more of a buying level. Again, after that, this high has been crossed, maybe probably more like a backtesting level. Again, it crosses this high, goes to the top. Again, this high. Again, this high which is there, that has been backtested. So again, from here, it starts moving up. So Gan says whenever old top, whenever the price comes to a old top, you should buy. So again, over here, we can buy. Or whenever a new high is been crossed, you can again buy. So at this point, definitely you would be able to buy. When it comes back to this levels and it starts moving up from here, again we can buy. This high has been crossed, it crosses to a new top. So probably again over here we can buy. It goes up, maybe probably again comes back. This is a previous high which was been tested, moved up. Again it came back. So probably when it came back over here, this was the previous top which was been back tested. You can again buy more and go with the trend, and probably as it starts moving higher and higher and higher, we can go with the trend and keep on pyramiding. So this was the strategy of Gann, how he used to pyramid across. So we get a high of 286 and a half. We saw this 286 and a half, and in terms of ratios, this is coming to 265%. Why we are talking about ratios, we'll probably see about that in taking references from one of the quotes from law of vibration of WD Gann. Now what happens after this? The highest price in history. Here you would be keeping up the daily high and low chart and this indicated high. Now because we don't have anything on the chart, in terms of maybe trading we are investing, we won't be able to cross verify with that on daily chart. A selling level and you would have sold short. A rapid decline followed. How was the rapid decline, until what levels it came down? Again, very important for us. So this happened in 1946, May 1946, 1948, July. The next option started at 196 and being far below where other options expired, you would sell shorts. Okay, fine. The main trend continued down, making lower tops and lower bottoms until February 1949. Low is 115. So February 1949, the low is 115. Let's look on the chart. So there was a high of 286 and a half. From 286 and a half, we see a low which is 115 over here. So this was the low of 115 which is there. What we are doing is with the theory which has been given over here, that is February 1949, low of 115. We are seeing this in the chart. So this is 1949 and this is February 1949. So low of February 1949 is somewhere around 115. And from there, again, it started making higher tops. So let's look on probably the chart that we are having over here. What is the ratio between this high, which is there? So what we say is, if I again consider this as an entire ratio, how is the ratio? This level 0 or maybe 40, price of 40 cent, we have considered this as level 0. And from here, the market has started going up. So this is level 1. That is what we have considered. The all-time high of 286 and a half. We consider this as a high, and from there was a drastic fall down. What was the drastic fall coming down to? It just came below 50%. And if you see in terms of price, 115. So the bottom of 40, from this bottom of 40, it made a all-time high of 286.5, and from there it came down to a level of around 115. And if we look on the chart as a ratio at level 0 and this level 1, we see the reversal which is there almost somewhere around at 30%. That is between 50% and 25%. We have marked both the levels. 50% is somewhere around 163 and 25% is 101. So just nearer to the 25% again this price has been coming. Imagine from a price of 40 to a price of 286, again it has been coming back almost to the same level, which is 25. Not exactly 25, but yes, nearer to that, which is 115. So this is just 0.3 or 30%. And we have seen that the reversal has mostly been coming to 25% and 50%. So again over here in a same similar way, that is what we are able to look across. And probably from here again the prices started moving up. Now we saw two different swing charts, that is May Ray, and in May Ray chart again on the longer time frame that we saw is two different thing. So the first reversal has been coming to 50%, and the second reversal again, this is a major reversal. The major reversal is again coming somewhere around to the 25% level. So 50% level, not only that level, but again with that the 25% level has been acting definitely in a very critical way. Definitely has been acting in a very critical way. So this levels are, that's why, very important. Let's look it from a different point of view, which is very critical for us. Now we'll take a reference from another book of Gann, which is WD Gann on law of vibration. Now these are actually articles about the law of vibration, which were there mostly in the articles that WD Gann has given. And we'll come down to a specific page over here. So we come on page number 12 over here, and we'll just read an article which says everything in existence is based on exact proportion and perfect relationship. I'll rather read the entire article. If we wish to avoid failure in speculation, we must deal with causes. Everything in existence is based on exact proportion and perfect relationship. There is no chance in nature because mathematical principles of the highest order lie at the foundation of all things. Faraday says there is nothing in the universe but mathematical points of forces. So the most important thing over here is everything in existence is based on exact proportion and perfect relationship. Now what is this proportion and what is this relationship? Let's try to focus on that. Now, what we saw over here is, first of all, we saw these ratios which is there. Now, what was this ratio? We had a bottom, we had a high, we got a reversal, we went to a top which was there, and from this top again we came down to a typical point. This point was again somewhere around coming at 25% level or 50% ratio. So this ratio is again fixed. Even if you went to a top, again we had a bottom, and this bottom was again coming down to a specific ratio which is just nearer to the 25% level. And hence, we have everything in existence is based on exact proportion and perfect relationship. So this proportion is again coming in a typical way. What is this proportion? Yes, this proportion first of all is at 50%, and the second proportion that we see is somewhere around to 25% or maybe to 50% level. So this is specifically what we saw for a chart of May Ray. Previously, before this, we had seen May cotton swings, which was there. And again, we saw from the high again to a bottom to a reversal. Now, this ratio has again come down to 25% level. And from there, again, the market did go down. So here again, we saw from this high to the bottom, this has again come back to the 25% level. And from there, it again dropped down. Now, when it dropped down again from there, it went, made a top. Probably this was a top. This was again a double top. And from there again, it came down. Where did it come down? It again came back to the 25% level. Just like we saw in May Ray, here again in May Con, we are seeing a similar kind of pattern. high, low, reversal. This ratio was coming to 25%. From there, it did drop down. Again, it went up. Probably this was more like a double top. And from there, when it dropped down to this entire ratio, this was again coming back to the 25% level. So here again, we see this is coming back to the 25% level. Everything in existence is based on exact proportion and perfect relationship. So the proportions are typically been given over here. The proportions are typically been given over here. Now let's look at the other part, which is perfect relationship. Now this is something called as Enneagram. And if we look at the Enneagram, there are two laws in this. One is law of three, which is related to number 3, 6 and 9. So this together makes law of 3, and we have the second rule, which is law of 7, which has been associated with number 1, 4, 2, 8, 5, 7. Right? So this is 1, then 4 and 2, then 8, then 5 and 7. Now if we try to plot these numbers on the chart, how the market has been moving across, let's try to look at that. Now, if we look at the structure of the market, which is 1, 1 to 4, 4 to 2, 2 to 8, 8 to 5, and then 2, 7, which is 1, 4, 2, 8, 5, and 7. So, if we try to reflect this in the charts, we'll be getting a similar kind of picture. What is this picture? So, if we look at probably this chart, and over here it is the same way. So this is, let's say, point number 1. From 1 we go to 4, and from 4 we go to number 2. So we have 1, and from 1 we go to 4, and from 4 we go to 2, and from 2 again we go to number 8. Over here from 2 we are going to 8. So from 2 to 8 is almost somewhere around 4 times. So from here, the 50% to 400%, this is somewhere around again 4 times, right? So if we look at the ratios, probably again they are the same. Now from what happens is, again from 8 we come back to somewhere around 5. 5 is just above 4. 5 is just above 4. So over here again this was 4, and just above 4, that is 93, we had 115, which is maybe probably above 5. And from probably over here again the market started moving up. From 5, the market again started moving up somewhere around to say. So if we look at this structure and maybe probably at this structure, these are almost the same. And where do we get this from? This comes from the Enneagram. So Enneagram is something which we have already discussed in Gurdjieff series. So George Gurdjieff, there are already a series of videos which talks about Enneagram. It talks about the law of 3. It talks about the law of 7. Maybe probably you can just try to get across more of into details. So looking at the structure of the market in terms of Enneagram, yes, we get a similar structure which can be seen over here. And probably if also we try to look across through the book, Law of Vibration, everything in existence is based on exact proportion and perfect relationship. Again, these ratios and proportions and relationships are already been given. So yes, Enneagram again is there. Uh, we have from the law of vibration exact proportions and relationship. And probably if you try to match this with the structure of the chart, yes, definitely this do match. So if you look at this structure, probably just trying to superimpose, yes, over here, yes, this was a bottom. So we had a bottom over here. We had a high and then a reversal. So from here, we had a high, we had a reversal. And from here, it started moving up, mid a high, somewhere around to level 8. And from level 8, again, it did fall down. Where did it fall down? Somewhere around to level 5. So this level 5 was just above our previous level over here, and from here again it started moving up. Look at the movement over here. This is a similar kind of movement from here to here, and again from there it started coming down. So something like a structure which can be seen over here typically. Probably this chart would be making much more sense. So we started from level 1. So this is level 1 over here. Then we go to level 4. So this is level 4, and from level 4 we come down to level 2, and this is level 2 over here. So from level 2 we again go to level 8. So this is 8, and from 8 again we come back to 5, which is just above 4. So this is 8 to 5. Now this 5 is just above 4, and from this 5 we go to number 7. So this is 7, and from 7 again we crash down. So from this 7 again we do crash down. So this is almost resembling across to Enneagram. The structure of the Enneagram that we have seen from 1 to 4, 4 to 2, 2 to 8, 8 to 5, 5 to 7. So this is how the structure across comes to. A very important structure that can be seen, probably you can call whatever it is there, you can call it a cycle typically, which has been coming across to, but this was actually an example which was coming from Master Commodities Course, and we try to see this exactly as it is been given over here, and we try to correlate this with the Enneagram. We have seen how the Enneagram is there, and we have seen how we can plot the Enneagram actually on the stocks, or maybe we can try to see this Enneagram in terms of a chart. So here is how the Enneagram comes as a chart, and probably this is what we are getting over here. A very important point, just if we try to maybe focus on this part, probably this would be much more easier for us to know and understand how exactly this would be replicating to. So here all the things can be seen together. This is the Enneagram. The Enneagram, the numbers which are there, 1, 4, 2, 8, 5, 7, which is also called as the law of 7. We have considered this on this as a chart. So when we draw this in terms of a chart, which is 1, 4, 2, 8, 5, 7, this is how this looks across on the chart. And when we interpret or maybe put it across on the same chart of May array from 1930 to 1957, we get an exact structure. We get an exact structure which can be seen over here as it is. So this is again an important discovery which was there of Gann. Of course, he has nowhere written about Enneagram, but if we talk about law of vibration, law of 7, this is what we get across in the form of an Enneagram, which comes from George Gurdjieff. The findings of George Gurdjieff, we are able to see that. And then from this, we can have this as an interpretation on the chart, which can be seen over here in terms of 142857, and the same thing can be seen on May array chart also. This is again very important. Try to focus on this, maybe you'll be able to find same kind of vibrations, same kind of cycles typically again and again. So this is again an important cycle. This is how you place across as a cycle and come to know about cycles, right? So when we probably continue further, maybe we will be discussing more. And of course, if you want to know early about this kind of findings, definitely go do get in touch with us, and probably we'll be able to help you further on this parts also. Thank you so much. Bye. Take care.